I'm going to state the obvious, but bear with me. In order to make money with trading, we have to buy low and sell high. But they're two very different things. Buying low is simply buying when nobody is looking, when attention is very, very low, when there's a lot of apathy in the market. Selling high, however, is selling when everybody is super hyped about an asset. Everybody talks about it. Everybody thinks it will go higher. So when we are buying, we are not necessarily that contrarian. We are not necessarily pushing against all the opinions that are in the market, because the market is simply just silent, right? There are very few people that have an opinion on buying an asset. Let's say we are now to buy gold or silver, right? There's not a lot of people that will say, hell no, never buy silver, never buy gold. It's the worst thing ever, even though it underperformed stocks massively in the last few years. Nobody has an opinion on gold because nobody looks at gold, because there's apathy in the gold market. And the same is true for, say, Bitcoin, right? When Bitcoin crashes 70, 80%, yes, there might be some people that say, don't buy Bitcoin because it's the worst thing ever and it will go to zero. But most people won't really care. So if you're buying the bottom, nobody cares. It's fine. You're not really that contrarian. You don't really have to fight for your opinion. You're not really going against the masses because there is no masses. However, when we're selling and you tell your friends you are selling Bitcoin at $72,000 and everybody thinks that Bitcoin will go to 100K and to 200K, and you're saying you're dissolving your altcoin portfolio and they've just bought the recent Pepe 3.0 coin, then people will potentially fight with you, right? Then people will say, are you stupid? Are you out of their mind? The bull run has just started, etc. So you need to stand your ground. And this is very, very hard because we want the party to go on, right? We've got our confirmation bias. We've already made money in the prior months, and we suddenly, out of nothing, have to suddenly say, okay, this is it. I'm done. I take the profit, I'm out. And that's very hard because it seems like everything is exactly the same as it used to be. Everybody used to be hyped. Now they're even more hyped. So now we should get even more money. But when there's maximum attention, that's unfortunately when we have to sell and when we have to be against the grain, when we have to be contrarian. It's way, way harder to take profit than it is to buy low. Buying low is easy. Selling high is much, much harder. Most people just become paper millionaires, but they're never locking that in. And so when the psychology is so strongly against us when selling, we have to ask ourselves, how can we identify proper times of sales? Because buying is relatively easy. Most of the time, most assets are at depressed prices. Most assets are only for a short period of time very hyped. And we have to be able to identify those kinds of times and we have to be able to act upon them. So we have to figure out different methods to identify when we might be potentially heated. And we don't have to always sell everything, right? Because not every system works perfectly, but we can sell at least parts, right? We can have different systems and we can then sell parts of our portfolio when one of those systems turns suddenly red. Now, I believe there are two factors that drive prices up. The first factor is that an asset is simply just cheap, right? When Bitcoin has crashed 70, 80%, then it's probably relatively cheap. And so subsequently, the price should trend upwards. So that's number one. We simply just have a very nice fair valuation. The second is momentum. So that's now the snowball effect, right? That's now when Bitcoin has already risen very close to the all-time highs and everybody talks about it again. There's new attention that gets onto the asset, new investors that jump on, and so we've got building momentum. The price is not necessarily low anymore, but we've got a lot of new people still jumping in, and it might make sense to ride the wave for a while.
This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting supporting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out, thebitcointrader.com, link is down below.
And so when we want to identify selling opportunities, I believe we have to look at both of those two things, right? The first thing is, are we still cheap or are we already potentially expensive? And we should only be selling if we are potentially expensive. And the second is, are we potentially dying down with the momentum? Because if we're just selling because things tend to be expensive, we might lose out on a lot of gains, right? Things can be expensive and become even more expensive and even more expensive, right? Those waves, they can last for months, potentially years, and they can create multiple X returns. So we have to figure out both. Is the asset in general already expensive? And secondly, is the momentum dying down? Now, there are very different approaches for different markets because what's expensive can be measured very differently. So let's say for the property market, we can look at affordability, right? We can look at how much does it cost to rent something? How much does it cost to have a mortgage on something? We can look at the median income of a household versus the median price of a household. We can look at how much yield do we get by renting something out versus what can we get, say, just in the bond market. Well, we can have a look at all of those kinds of metrics. And we can try to figure out when is property very cheap, right? Property could be cheap when it's historically very easily affordable and when it returns way more than, say, the stock market. Where we try to find out where the stock market is at, we can look at very similar metrics, right? We can look at a historical chart of the PE ratio. I simply search for this, right? Price earnings ratio, S&P 500 chart or historical chart. You will see where we're currently at. Or we can look at what's the market cap of all publicly traded stocks relative to, say, the US GDP. Right? This is called the Buffett indicator. Or we can also look at historical dividend yields. Right? We can have a look at all kinds of different metrics to figure out, are we currently cheap or are we currently expensive? For the crypto market, by the way, for Bitcoin, I look at the realized price. So I look at the average cost basis of the market. Simply search for Bitcoin realized price and you will find that chart. I also discussed this several times on this channel. So if you don't know about this yet, then feel free to subscribe. I publish videos regularly. But then there's also the more tricky part, and that's trying to find out where we are at with the momentum. And for that, for Bitcoin, for example, I did a back test. I tried to figure out where are we currently in our waves. And what I found out is that moving averages actually tend to work pretty well. So when you calculate a 120-day simple moving average, you figure out when you sell below, you tend to protect yourself against quite a lot of damage. And when you buy, whenever we cross above the moving average, we tend to be pretty healthy in the market. So we simply just follow the trends, right? The moving average is a trend strategy, a trend following strategy. We tend to do well simply by following the trends. And if you're currently below that moving average, it's not so great, right? Then the momentum tends to die down. And if you're currently above the realized price, that's also not great because then the market as a whole is in profit and we might get closer to that average cost basis again. By the way, what I just said, right, is actually what's currently happening. We are above the realized price, so the market is still expensive and momentum is dying down. So I personally, I'm also sharing this several times on this channel, I'm personally rather bearish on crypto. I believe we can easily go to 40K, maybe 30K, in the very worst case, potentially even to 25 to 20K in Bitcoin. I believe there is a possibility that we go that low if the macro environment aligns similarly, which I believe it kind of might, because also stocks are very expensive now with the PE ratios, etc. Right? So it's important to have models. It's important to have some kind of thing that can help us identify selling opportunities, because most people do not sell high. A lot of people buy low, but very, very few people are able to sell high, and we have to be ultra contrarian. If we want to sell high, it will not be common knowledge to sell at the point of time when it was the best to actually sell. So we have to be the first ones that think about selling. And if you want to be among those first ones, you have to have your own approaches that are not yet commonly known everywhere, right? If everybody knows about an approach, then that approach is already priced into the market. So no model is perfect, but some models are useful. I try to use many of them. I look at the value days destroyed. I look at the market value to realized value z-score. I look at the realized price. I look at those moving averages. I look at PE ratios. I look at market caps relative to GDP. I look at stablecoin dominances as stablecoin market caps, at relative valuations of altcoins to all other kinds of things. And I try to form a picture out of all of those things. I try to use indicators that tended to work well in the past and that hopefully still have some validity in the future. This is my personal approach, and this is how I sold one day after the all-time high, right in the middle of March at 72,000. This was because the value days destroyed metric at that point in time was suddenly flashing red. And I got this signal actually from one of our premium members. So I talked about this indicator several times in the past, and then a premium member in the Telegram chat wrote, "Hey, value days destroyed just turned red." And this is then where my alarm bells also started ringing, and this is then where I sold a lot. And then I sold my second batch once we went below the 120-day SMA. So it's important to have some kind of approach. My approach might not be perfect, but at least it's one of the approaches. It used to work very well in the last few months. I don't know if it's continuing to work well in the future, but at least have something, right? Don't rely on your YouTubers to tell you to sell, because again, the vast majority of YouTubers is always bullish anyways, and they are very unlikely going to tell you to sell when it's actually the best time when people are most hyped. Most YouTubers do not get anything out of being bearish when most people are bullish, because then you simply just get bashed in the comments. People don't want to hear that message, even though it's the right one. So yeah, feel free to subscribe to this channel. I try to be as objective as possible. I'm sharing what I'm personally doing. Feel free to give this a like if you want to help this channel grow. And in case you haven't yet, there's also a Telegram channel that you can join below. The link is over there. Cheers.